President Trump doubling down on his America First trade agenda, announcing an impending 35% tariff on Canada beginning August 1st, unless Canada curbs its high tariff on U.S. dairy farmers and cuts the flow of fentanyl across the northern borders. But Canadian Prime Minister Mark Carney posted on X that Canada is already making progress on fentanyl. He says Ottawa remains committed to working with the United States. All of this on the heels of a wave of new tariff announcements this week on 8 other countries that President Trump says are undercutting U.S. industry. The president says the goal is clear: bring jobs and investment back home to America.
We've taken in hundreds of billions of dollars in tariffs, hundreds of billions, and we haven't even started yet. These are wealthy countries, and they or their companies will come into our country and build, and that's what's actually happening. If you had a very low tariff, there'd be no incentive to do that.
Joining me now, White House National Economic Council Director Kevin Hassett. Kevin, it's great to have you this weekend. Thank you so much for being here. I like what the president just said. If we didn't have tariffs, there would be no incentive to get their supply chains into America. That is so critical. Is that the real priority here, to ensure that America has a supply chain and we are not so reliant on communist China, a clear adversary?
Absolutely, Maria. You said it very, very well. But really, I could think that the president has 2 priorities. The first priority is what you just said about making sure that we never again face a world where a foreign government could potentially upset our supply chain in a way that would shut down American industry. But the other thing is that I think it's more interesting to me is that he has convinced the American people correctly that they're better off if they buy American. If they buy American, they're going to get a better product. If they buy American, they're going to help the communities around them. They're going to help their friends and neighbors who have jobs. And so I think that we're seeing a big shift in demand from Americans for American products. And you see it best in the data. Of course, that's the best place to see stuff. The CEA put out a report this week, as you know, that said that the prices of imported goods into the U.S. have actually gone down, despite the fact that we've raised hundreds of billions of dollars of tariffs. I think the best explanation for that is people are beginning to recognize the harm that happens when other countries dump their stuff in the U.S. and put Americans out of work. And so I think that one of the reasons why you're seeing the letters and the president raising the rates and putting more pressure on getting better deals than he's seen is that we've put a lot of tariffs in place already, and the results have been fantastic.
Yeah, and not to mention all these hundreds of billions that you're taking in terms of tariffs. I saw that the Washington Examiner this week reported that for the first time since 2005, the federal budget posted a surplus. That's a big deal, given what President Trump just said, that you're taking in, what, $100 billion this year, or hundreds of billions of dollars overall in tariff revenue?
Right. The CBO outlook that we got just a couple of weeks ago before the big, beautiful bill was voted on says that with current policies, we're looking at about $3 trillion in tariff revenue over the next 10 years. And so we're definitely on a path to completely revise the way the American fiscal system works. And I'd add one other thing about the way people cover this. A lot of people are like, why are you mad at Canada? Why are you mad at these guys? Why are you mad at those guys? Now, for sure, there have been some countries that have been dumping things in the U.S. in a very harmful way. But in the end, what President's doing is putting America first. These tariffs are an America first policy. It's really about us more than it's about them. We're going to have a much more efficient tax code, a much bigger, faster, better economy because of the complete portfolio of policies that the President's putting into place.
Yeah, I think it's a great point. But again, companies are complaining that they don't have clarity. So, you know, today it's Canada. Next week, it could be China again, and China is threatening retaliation over President Trump's tariffs. They say if they're reinstated, China is warning the other countries that they will, quote, respond resolutely if any trade deals are made at Beijing's expense, and if the Beijing supply chain is not at the center.
Well, I think that the clarity is very clearly, there's a date on it. The president has made it clear that in early August, that's it. We're either going to have deals or we're going to have the tariffs that he put into the letters. And that puts a lot of pressure on everybody to come to the table one last time and give us everything they got. And I can tell you, I can report that everybody is exactly doing that. And so I would guess that before the August recess, when Congress goes home and everybody starts to celebrate their state fairs and so on, by then I think there'll be a heck of a lot of clarity.
All right, so you think we're going to get most of the important trade deals done by the time Congress leaves for the August recess?
For sure, by the deadline, yeah.
Kevin, President Trump continues to put pressure on Federal Reserve Chairman Jay Powell to cut interest rates. He even called on him to resign in this week's cabinet meeting. There's growing talk, of course, about you being a contender as the next Federal Reserve Chairman against names like former Fed Governor Kevin Warsh. I know you can't admit or deny right now on any of that, but let's go hypothetical. Hypothetically speaking, if you were the chairman of the Federal Reserve right now, would you be cutting interest rates? What would your policy look like?
Right. Well, again, I'm not going to put the hypothetical out there that I'm Fed chair, but I will talk about Federal Reserve policy. The bottom line is that there are very normal correlations between the policy rates for our major trading partners. Very high correlation between the Central Bank of Europe's policy rate and the American rate. And if you look at the normal relationship between the European rates and the U.S. rate, then the U.S. rate right now would be about 1.5% lower than it is. And so you have to ask yourself, why is it that the normal correlations that we've seen over and over again for many years between the actions of the central banks have broken down precisely now? And you don't really have to wonder about it. It's because the central bank has been out there saying that the tariffs are going to be inflationary. They've been saying that since really President Trump took office. But as you and I just discussed, the tariffs have not been inflationary, just as I gave the economic intuition for months ago when we talked about how we think that the Chinese are going to eat most of the tariffs. And so the bottom line is they've got a failed observation about why they think they need to be worried about inflation. The data have spoken against them, and they're now way, way out of whack. They're an outlier in global financial policy. And so I think there's plenty of room for the Fed to correct that.
I spoke with the president recently and asked him about this $9 trillion in debt that is rolling over this year.
Right.
And what the president told me was the fact that he needs lower interest rates in order to roll that over effectively. So do you think, as chairman of the Fed, Jay Powell should be thinking about the cost that it takes to carry the debt that we do? I mean, the cost in our interest right now, just on the $37 trillion in debt, is $1 trillion, more than we spend on defense. So should that be something that the Fed chairman thinks about in terms of where he makes monetary policy?
Absolutely. He needs to have a very clear model of how the economy works and how everything interacts with everything else. And the bottom line is that I don't think that there is a sensible model that one could concoct that's consistent with the policies that we're seeing. It's very, very easy to see that inflation right now is lower than it's been by any measure for more than 4 years, that economic activity is picking up because of a huge increase in supply. Normally, when there's a big positive supply shock because of stuff like the big, beautiful bill and deregulation, that puts downward pressure on prices. It takes the pressure off the Fed. So if you have a sensible economic model, then there's a lot of cause right now for lower interest rates. And I would just say that another thing that I know the president cares a lot about is the fact that the Fed really needs to be transparent. And the Fed needs to say, so, okay, if you're going to say that we think there's going to be a runaway inflation because of tariffs, which I think is inconsistent with economic theory, but suppose you believe that, then show us your work. Show us why do you think that? And then we have a model that we can look at and evaluate over time and say, okay, well, it's time to change your mind now that it's 6 months later and in fact prices have gone down.
Kevin, there's also all this speculation about what he did with this money to upgrade the Federal Reserve headquarters. Because of that, Bill Pulte at the FHFA is asking him to resign. Do you think Jay Powell should resign?
I think that the building is a debacle. It's an absolute debacle. I think that Russ Vought sent a letter detailing all of the cost overruns and the ridiculous features that they've built into the building. And I just can't imagine, why people at the Federal Reserve would have supported such runaway spending. And I do think that if it were me, I'd be pretty ashamed of myself.
All right, we will leave it there. Kevin Hassett, great to see you this weekend. Thank you so much. Kevin Hassett is
Thanks,
at
Rhea.
the White House.